Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Sunday, January the 27th, 2013, and here is this week's Week in Review brought to you by WallStreetTrading.com. I want to first start by taking a look to see how the indices closed the week out, along with a couple of key sectors here. Taking a look, you can see here the NASDAQ was up 0.48%. The Russell 2000 was up 1.39%. The Dow Jones was up 1.8%. The S&P 500 was up 1.14%. The crude oil was up 0.22%. The oil service sector, the OIH, was up 2.59%. Good action there. Gold GLD was down 1.5%. The financials via the XLF was up 1.87%. The Dow Jones transports were up 2.95%. That's via the IYT. And the semiconductor index, the SOX, was up 1.17%. So a lot of positive tone action across the board. The markets continue to chug higher. Dip buyers continue to come in and buy the dips, which is working, which continues to work. And you can see people are starting to dump these precious metal stocks. And the gold miners actually got hit, which we're going to talk about that later on in the videos as we have been discussing how the gold miners have been having trouble breaking over that key trend line that we've been showing you guys for the past month or so. So let's go ahead and get into it. Hope you guys are enjoying your weekend so far. If you have not been to our website, make sure you go to wallstreettrading.com. Tonight at 9:30 p.m. we'll be doing our Sunday night live chart session, which we do every night. The room is starting to build, so make sure you get there early. We got a lot of good stuff going on over here, and everything is coming together just like we expected. Now let's take a look at the monthly chart of the SPY. You can see so far for the month, we're going to close the month out on a strong note, looks like. We open up the month here at 145 or so on the S&P, and we're currently up at 150. So we're up 5 points, all right, from the opening price of this month on the S&P via the SPY. All right, next resistance level that we have to be on the lookout for is around the 153 level. That's going to be coming in around the highs that we made back here in December of 2000. This is 2007 here, 2007 December highs, which also lines up with the November highs. So that 153, 153 half area is the area that I think we're going to have some trouble. But in the meantime, right now, it looks like we're going to be heading there. You can see the moving averages on the shorter moving averages on the monthly time frame are curving up here. And you can see the distance between the moving averages are starting to spread out here, which is showing that the trend's kind of getting stronger here. That's on the monthly. Now let's take a look at the weekly chart. You can see the weekly chart's going to have some resistance at this 152 area, 150, 1/2, 152, call it. Then we got to go back to that monthly chart of 153. But you can see here we had 3 consecutive higher highs, well, 4 consecutive higher high closes now for the past couple weeks here, for the past 4 weeks. We've been going in a nice little strong trend in the market here, so it's actually looking pretty good. So level to watch, I would say, this week is 148. If we could continue to hold above this past week's trading sessions lows around that 148, I think we could continue to chug higher and may have some dip buyers come in and try to keep this market afloat here. Now let's take a look at the daily chart of the SPY. You can see we're trending pretty strong here, cruising along the 8 EMA, and the 5 EMA on the daily time frame, showing that the trend is pretty strong on the shorter term time frame. The 20-day simple moving average and exponential moving average are around the 147 area. And we can expect that to get hit, but not until, obviously, we start trading below and holding below these shorter-term moving averages. So right now, stick with the trend. A good level to work off of. You can see from this week alone is this 140, this 150 area. Sorry, this 149 area right here. If we continue to hold 149, we should be trading higher. At the same time, if we were to pull back and get like a little spike down pullback, this will be a good area to buy right here, this 147 area, because that comes from this little consolidation we had right there. But again, the moving averages are turning up here, the short-term moving average, so the trend is kind of getting strong. You can see the distance is starting to get farther a lot between the moving averages. So stick with the trend, continue to buy the dips. It's what's been working. One thing to realize though is we are 1, 2, 3, 4, 5. We are up 6 days with higher closes in a row. All right, so we are a little bit extended right here, but if they continue to buy the market, you got to find your little low risk entry trade intraday and take the trade. I mean, that's what's working right now. Let's go and take a look at the triple Qs. The Nasdaq is kind of lagging behind because Apple is just not participating with the market at all. But you have some other technology stocks that are starting to step up to the plate to try to hold the Qs up, which we'll take a look at a couple of those here shortly. After we go through all the basic stuff, all the indices and the sectors and the commodities and stuff like that. But the Qs, let's go ahead and take a look at the monthly chart on the Qs. The Qs still remain in this nice little upward channel. They're holding above this 67.70 level, as you can see. They've been holding that 67.70 area since back here in August. And if we could take out this month's highs and get back above 68, we could maybe get a move towards 70, then we go from there. But again, notice the trend. The trend is still in an upward channel and still looks pretty good. Now we take a look at our weekly time frame. Our weekly time frame has this nice little base down there at 64. And right now we're kind of consolidating in a little kind of upward type of channel right there that you can see on the weekly. Off of this little extension candle right there. So this could be a little bit bearish just because of the slant angle of it and how the market's going up and it's not doing anything. Meaning that the market was to sell off this thing, the Q should actually get hit. But we'll see how it plays out. Again, as long as the Qs can hold above this area right here, above this 66 level, we could just continue to base out and try to get some of that little bad sentiment out there from the Apple, let this build a bit, and then try to move higher possibly here. So we'll see. We'll have to keep an eye on the 66 level and keep an eye on the 68 level. Then on the daily chart, we're watching this little area that we've been discussing for the past couple weeks here between the 66.22 and the 67.50. You can see we spiked out of that area on Tuesday, but then fell back. So there are some people trapped that are along the Qs up here at 67.50, which they're feeling some pain. They're not really feeling much pain because it's only down 50 cents. But if the Qs were to start coming down, we could see this thing sell off as some people are trapped from this day. And then everybody that's been trying to position to the long side right here, they're going to start, feeling less conviction. They're going to start selling. We can get the nice little selling pressure to the gap down here around 65.15. That's if that happens. If the market continues to hold up and goes higher, I think buyers will just say, screw it. Let's buy the Qs back again and start looking for good stocks in the technology sector, which I'm starting to see that a little bit right now. So that's how the Qs are looking. The IWM, Russell 2000 has just been on the tear. You can see, like I've told you guys, whenever you have an upward channel that breaks the top side, you usually get more buying pressure because, it usually hits people's stops. And this is a pattern that usually runs off to the downside. But when it does, when a pattern fails, it usually goes in the opposite direction pretty fast. And that's what's happening right here. This pattern, this little upward channel, this is the angle that usually usually pulls back to this area right here and then tries to get a bounce or something like that. This time it just went straight up. You can see some sellers try to come in a bit here, but now we're hanging above this key trend line from these three inflection points. And now as long as we hold above that trend line, you can use that as a gauge as well on the IWM. So still going on a tear. That's a daily chart. Kind of went backwards here. Sorry about that. Take a look at the monthly chart. Monthly chart's making new all-time highs. Weekly chart's making new all-time highs. Nice steady uptrend. And you may want to start looking at some of these small mid-cap companies that are looking good on the daily charts. I'm actually going to do a scan tonight and see if I can find some good ones. All right, so let's take a look at the dollar futures chart here. The dollar index, I should say. Dollar index, like I've been explaining to you guys before, this thing is starting to hold below our key level right here. Couldn't break above that level the prior week. Couldn't break above that level this trading week here that we had. And now you have this key trend line to watch with the dollar. Kind of has like a little head and shoulders pattern here with a little trap above this level. And then this little right shoulder right here. It's kind of at an angle though. But the dollar was to break below 79.60. We can see this sell off back to the bottom of the range. What's going to be interesting here is going to see if they're going to start putting the money back into the precious metals because they're going down. If the dollar sells off, we're going to see they're going to buy the precious metals. Now, if the dollar goes down, they don't start buying the precious metals. Then we're going to look to see if they start buying crude or copper or some of these little commodities that go up when there is growth going on in the economy, of course. So we'll see how this plays out. A lot of interesting things going on right now. The euro is breaking out. We've been talking about the euro getting stronger and stronger ever since we've been able to call it via my proprietary channel analysis, which I was showing you guys before. And right now, after breaking out this little range right here on the euro, all right, we're holding up. Now, why do we watch a euro? We'll watch a euro to kind of gauge it along with the dollar and kind of gauge with the market strength. If you guys recall, when the euro was strong, the market was usually going up and the dollar was usually going down. So we're trying to see if that correlation continues. I really haven't been seeing the inverse correlation that was happening with the dollar. I mean, and if it is, it's not that strong as it was before. But I'm not even really paying attention to the dollar intraday anymore because I haven't been seeing that inverse correlation where the dollar's weak and the market's strong or whatever like that. Just on my end. If you guys have seen it, well, that's pretty good. I would love to see the analysis, but right now I'm not seeing that strong inverse correlation happening between the dollar chart and the indices anymore. So we'll see. We'll see. I want to see if the dollar breaks down, how the precious metal acts, and how these growth commodity stocks act. Let's see what else we're taking a look at here. Let's take a look at the crude oil. All right, via the crude oil futures. All right, they're up 14 cents. You can see we're continuing to chop through this little supply zone that we have from this little consolidation right here. All right, probably everybody that's long from right here that's still on, they're probably still holding because they probably expect it's maybe going to try to come back and test these highs. My opinion, crude oil is holding this 95 level. You see it's trading in a range kind of now between 95 and 97. All right, and we're in this little supply zone, like I said. A breakthrough 97 will take this to 98, to the top of this little range right here, and then possibly towards 99. What else? Some of you guys that like to take a look at the USO, remember the USO has not caught up with the crude oil futures, because if they were, they would have been in this little supply zone just like the crude oil futures were. They're still below that level. So if this crude oil futures get stronger, I think you can have an easy trade in the USO for a break above 35 to like around this 35.50 area, maybe 36. That's if crude oil gets stronger. And you can see here, this thing's basically consolidating below its resistance area. So keep an eye on these energy stocks. A lot of them are shaping up out there. I'm starting to see some buying pressure coming into the natural gas stocks, the CHK, the DVNs, the SWNs, the COGs. Some of the other large cap integrated energy companies are kind of overbought, or they're extended. But again, if people are looking to buy the market, they're just going to keep on buying them. And your job is to find a low risk entry intraday on a dip or something like that and get involved in the trade if you're looking to make some cash flow trades, if you're an active intraday trader. And if you're looking to do stuff like that, you can come into our chat room, mywallstreettv.com. Email me at ccooper@wallstreettrading.com if you're looking to get the password, and I'll see if everything's lined up where we can give you that. But, I mean, so far, guys, we've been nailing different calls in the room. I mean, if you follow me on Facebook at Chris Cooper, I've been doing a lot of stuff on the Facebook, on the Wall Street Trading Facebook page, on the Channel Guy Trader Facebook page, just kind of giving you guys a glimpse of what we do on a day-to-day basis and how we get our traders set up in the room, which is a lot of good stuff. It's like a battle zone out there, guys. You got to be prepared. You can't be coming into the office, to trade at 9:30 when the market opens at 9:30. You got to be there at 8 o'clock, maybe even 7 o'clock, which is when I wake up. It's a war zone out there, and it's going to get even harder for the fact that I think people are just going to continue to buy. So you're going to have people that are trying to sell, people that are trying to buy. It's going to get kind of mixed, if you get what I'm saying. I've seen this before, and when that happens, you really just got to make sure you're managing your risk accordingly, and it's going to be a stock picker's market, which it has been, if you ask me, for the past 2-3 weeks or so now. That's been much better to try to focus on specific stocks and kind of sector stocks, because some stocks in the sectors that are going up aren't participating. All right, and that's what usually happens in this type of environment. So we'll see how this plays out. Crude oil is looking pretty decent, though. Now this is where it gets interesting. Actually, I forgot to take a look at the weekly chart with crude oil with you guys. Weekly chart of crude oil futures. You can see this nice little big triangle that we're looking at here, still playing out to the T. Next target is 100. Then you take a look at the monthly chart. Nice tight coil pattern here, which I've been talking about for the past 3 months now. Which I'm expecting a big move in crude oil. Sometime in this maybe second quarter of this year. What's going to cause this? What catalyst is going to cause this thing to break out? Maybe a war. Who knows? Maybe the dollar's going to fall down. Crude's going to start breaking out. Whatever it is, we'll be on top of it over here at Wall Street Trading. And me, Channel Guy Trader, I'll be on top of this stuff for sure. So let's take a look at the gold. Gold futures. Let's start by taking a look at the monthly chart. Monthly chart, you can see, is basically still trading in that nice little wide range between 15.56 and 18.26. We pulled back off of the highs that we made last October, and we're sitting right now on top of this 20-day exponential moving average in the monthly time frame here. Taking a look at our weekly chart, you can see that we're kind of coming back into a vulnerable area here, because if we don't hold this 1640 area or so, we could definitely come back down towards this little channel right here. As you can see, this was the consolidation that we had earlier, say mid last year, that we broke out of. The back test held back over here in let's see, what month is this? Back in here in December. We held in December again, held in January. Now this week we got knocked down, and gold looks like it wants to come back down and test the 1640 level. Now the longer it holds the 1640 base, the better we can expect to break out of this little downward channel that's kind of developing right here. But if we break below 1640 and hold, we're going to be expecting to move back down towards the bottom of this little trend line down here, which would take us down 1600, which would just take us back into this little demand zone that they had right here that we broke out of. So a lot of interesting things going on in gold, and we're going to take a look at the daily chart. Then we're going to take a look at the GDX and go from there, because the GDX has been playing out to the T what we kind of expected it to do here. So the gold futures are back at this key trend line that was here from May, June, and July. We held that level again, like I said, back here in December and January, and now we're coming right back to it. And look at the amount of time that we tested it. Right here. We bounced off of it. We tested it, say, in a matter of 2 weeks. All right, we got this bounce right here, and now we're testing it this time in a matter of, say, 3 weeks or so. All right, so that's very important to watch. Again, if we break through this key trend line, we start holding below that key trend line, we could definitely get some selling pressure. And 1630 is going to be the key level to watch, because that's when we have this little breakout right here from this nice little kind of ascending triangle pattern right here. All right, so GDX, guys, a lot of people were trying to buy precious metals. I was even maybe at the point where I was looking to get involved in these precious metals, and I was looking to get involved in SLW, but good thing I didn't do that, because these things actually broke down. I mean, like we've been explaining here for the past couple weeks to a month or so, even longer than that, we've been trying to break above this key trend line from this action that we had here in my little proprietary channel analysis. Nothing special, just channels at an angle that you can realize if you know how to look for these patterns, you know how to look at a chart with the more visualization skills, you could say. But you can see how this was a channel. So this is the same thing as a little horizontal channel, again, that breaks down and is trying to get back above that channel, but it can't do it. That's exactly what's going on right here, except it's at an angle. And I can see these things. I've been studying this type of analysis for the past 3 years or so, and that's how my eyes are prone to notice this type of stuff. And there's a lot of stuff, again, that I do in my on my own research that I get my trades prepared for, but I don't really show them what I do because it's a little bit more complex. But, right here, this thing was kind of compressing. Like I said, we're going to be looking for this compression move. If it was to hold above this key trend line and get confirmation, we'll be looking for a move back inside that channel. But what happened, the compression came. It didn't hold above that channel. They came right back down, knocked it on Tuesday, and there's been sellers in this GDX since the longest. Now, I wouldn't get short GDX right here. Some gold miners may continue down, but now the real test or the real truth of if gold miners are going to go back up or continue lower is going to be when it comes back to get a bounce and it either makes a official back test at 44 and fails and rolls back over, or it actually makes a jump back up, a spike back up, and doesn't even go back to test the 44 area and makes that lower high right here, off of these highs right here. I mean, that's going to be even more bearish, because that just shows that people are selling right in front of that 44 level, and they don't think it's going to go back up there. Because whenever you have a prior support level that breaks, the best confirmation, the best time to get short is when it rallies up, it gets an official back test, they hold that offer, or the sellers come back in and hold that selling price right there, and it goes right back down. And that we saw a lot of those. We saw a lot of setups like that intraday this week. So anyway, that's how the GDX is looking. Another thing, though, on the weekly time frame, the GDX does have some nice support around the 40 level. You can take a look at these lows that we made back here in 2010. These lows that we made back here early, mid-2011. Again, right here. I'm sorry, 2012. Sorry, not 2011. 2012. And right now we're going back to those levels. And you can see we were basically around this 44 level for the past 1, 2, 3, 4, 5, kind of 6 weeks here until we broke this week. So there's definitely could be some more negative order flow, and then you can see the consolidation right here on our closing prices, my closing prices system right here. See, I was hanging around this area right here, and now we finally got a lower confirmation close, a lower confirmed close. Now it's going to be interesting if we get another lower confirmed close. So that's how the GDX weekly chart's looking. The GDX monthly chart is looking it's the same way. You could definitely see how there's some support, a potential for an area to buy some GDX around the support area around the 40. All right, maybe they shake it down below 40, do a little shakeout, and that's the buy. Right here back at these 32s. But we start hanging below 30. If we start hanging below 40 and sellers continue to hit these miners and gold starts to go down, expect GDX to go to 32, and that'll be a good buy right there at 32, as you can see from the weekly time frame. This nice little base that was developing right here off of this little shakeout action that happened right here. A lot of good stuff, guys. This next week's going to be an interesting week. Still have earnings plays coming out. Let's see here. Let's take a look at the OIH. I forgot to take a look at the OIH with the USO and the crude oil stuff. But OIH, this one's trading pretty nice as well. You can see this one had that nice little head and shoulders pattern that was going to break down. That didn't even go to the measured move as bidders came in here, traded in a range. All right, and now we're breaking out. So I mean, most people, most probably institutions, and most smart money people, they're involved around 40, and they're already $3 in the money. It's kind of hard to buy this up here, but these continue to go higher. Again, pick your little spot intraday in those stocks that are moving up. I mean, a couple of them that are look good to me. Do, it's on a tear, but it's on a power trend. So if this thing wants to pick up some momentum, this could be a nice momentum trade. But again, these things are up near the highs, but you can see how they're cruising along these fast-moving averages, which show you that there's momentum in them right now at the moment. Especially in rig. I mean, this RIG, this one's been on a tear, and you can see this one's kind of cruising higher as it, after getting sold off on a little fade right there, it recovered that pretty well. Which makes sense because I'm pretty sure a lot of people said, oh, the rig's up a lot. I could go short and put a stop at the highs. But guess what? Those people are stopped out. Now, question is if it holds above those highs, then it's going higher. So if it holds above 56.34 for the majority of early next week, or the next week or so, you can expect this thing to go higher. Then you want to be looking at your longer time frames, and this thing can most likely go towards 60, which looks like a key level to me because that's where it had this little nice consolidation that it broke down. It rechecked that level right there, failed. Recheck the level again there and fail. That's just an example that I was showing you guys before, how prior support becomes resistance. You can see that pretty much to the T right here on this rim example right here. Consolidation. All right. They drop that bid. This is the daily time frame, by the way. They try to run it up, failed. Ran it back up, failed. So 60 is a key level on rig, and if momentum continues to hold in these OIH stocks, this thing has another $3 in it. If you ask me, that's probably where it wants to go. All right. Let's take a look at silver. Sorry about jumping around the place. I want to stick with these precious metals sector real quick to finish this up. Silver is a nice little downward channel that I can see developing right here, which I didn't even draw in, but I could just spot it out by looking at it. You can see it right there. Duplicate that, and you can see it right there. So this thing may need to go back all the way down to this thing may want to go back all the way down below 29. Maybe hit some people out that got long at 29. Obviously they got long at 29. I hope they took some profit up here. But anyway, this thing is again selling off with gold, and it's probably going to go back towards 29 to kind of check that level again to see if there's a strong demand down there in silver. Again, but silver is an industrial metal, so if there is growth going on, I think silver has a chance of holding up a little bit more compared to gold. All right, let's take a look at copper via the copper futures, and just going to take a look at the daily chart here. Copper futures held above that little yellow range that I have, which was a lot of consolidation there. Try to break out this little downward bullish channel, and so far has not been able to do that quite yet. But once copper really gets above this $3.73 level, this thing could get going. Let's see what else here. And last but not least, the volatility index, and we'll take a look at a couple stocks. Volatility index, the VIX, breaking below our key 1350 level. All right, and got bought up. We actually called out the VXX for a long trade intraday on Thursday. Made like a 90 cents on the trade. Worked out pretty well, and I actually talked about that in the video, I believe. But either way, volatility index looks like if it breaks below 1250, we're going lower below 12. And if we get back above 1350, we could have some people starting to buy some volatility for protection. So we're watching the VIX for sure. The VXX, you can see this thing just continues to get crushed in a nice little strong downtrend right there. And you can see how it's hugging the 8 EMA and the 5 EMA SMA to the downside there. All right, so let's go through this real quick and talk about some stocks. Some strong sectors, like I said, oil drillers, the data storage stocks are looking pretty strong. That's going to be your STX. I like how this one's looking, the 60-minute chart. They have earnings on Monday. This stock's going to be pretty interesting. We're definitely going to be watching this stock here. And they have earnings, hopefully before the bell. Oh, no, they have earnings after the bell. All right, oh well. Earnings after the bell on STX. You can take a look at EMC. You can take a look at NTAP. You can take a look at SNDK. SNDK actually looks pretty interesting because why? It's actually holding above this little gap area right here now. It's coming from this little level right here. So long it can hold above 49.34, looks pretty good. Let me take a look at the 60-minute chart. Some volumes coming in there. Yeah, this one over $50 looks pretty good. I'm actually going to put an alert right now and see if it maybe sets up for a trade on Monday. Let's take a look at the weekly chart. Weekly chart looks pretty good. And take a look at the monthly chart. Monthly chart, wow, it's just been in this little range where it kind of looks like a nice little cup and handle pattern on the, sorry about that. Nice little cup and handle pattern here on the monthly time frame. So this thing could get pretty interesting, guys. Keep an eye on STX. Keep an eye on SNDK. All right, let me actually write that down on my list here. And we'll talk about these more later on tonight in more detail of how to execute the trade and how it look like they're setting up on the 60-minute chart. All right, and then if you're looking for a cheap data storage stock, you can take a look at STEC. This one has been getting beaten up here, but some buyers and some volume starting to come in this one here. You can see it's been holding this $5 level area for the longest. Maybe ready to lift off here. Take a look at the weekly and take a look at the monthly. This stock used to be a $40 stock. All right, what else are we looking at here? The home builder stock, the retail stocks are looking pretty strong. A couple of retails you can take a look at. Michael Kors, KORS. Looking like this thing's going to get a power move. If it can hold above this 58 level, keep an eye on Michael Kors. You can take a look at Lulu. Lulu's holding that little 65 level down there. Now it's kind of breaking this nice little steep little downward channel that it had, and could maybe continue to get some topside action there. It's up 3 days in a row, though, so remember that. 3 consecutive higher closes as well. Take a look at Deckers. Deckers now looks like it could have some juice, so a nice little kind of sideways action going on here. And hanging above this, holding above 42, this thing can maybe go up to 44 to test these 200-day moving averages. That looks pretty good. Another retail stock you can take a look at is DKS. I like Dick's Sporting Goods over 49. You can see, especially if it breaks back with this 20-day moving average. What I really like about it, though, is a 60-minute chart, which, again, I'll talk about that more in detail in tonight's 9:30 p.m. session here. You can see Deckers was holding above this, was trying to break above this 48.50 level, and then finally broke in the last hour or so. And this thing's going to give a nice trigger right over 49. If you take a look back at the daily chart, this thing has a target, I would say, back up here towards this little base right here that was trying to hold around 50. So got about a point there, especially if you get some momentum to it. And you can see here how this little downward, you can see the closing prices here. We're in a nice little tight little downward consolidation. We got a little confirmed close above that level on Friday. All right, so we finally got a nice close above all these other previous closing prices. So keep an eye on DKS. I really like that one. I like how the 60-minute chart is set up. What else? I'm not trying to make this video too long. JCPenney, looks like it could be warming up. It's been in the news. Maybe keep an eye on this stock here. You have some little momentum, possible trend line action that you could draw right here. All right, so we'll see how that one sets up. Not my biggest favorite retail stock, but keep an eye on it. Nike is a strong one. Ralph Lauren is a strong one. That one continues to be strong. I've been watching this fossil. See this fossil is maybe going to start getting some juice. Has all this little gap area right here. The last support base that it was trying to build was back here around the 115 level. No, around the 115 level. All right, it comes from this little area right here. I know it's just chugging up, but again, if these things pick up some momentum, they can continue to go higher. You can see how it was trying to break past this 105 level. Finally broke past the 105 level on Thursday, and now consolidated in a range on Thursday and Friday and try to break out in the last hour. So keep an eye on Fossil. Keep an eye on the whole retail sector in general. All right. Home builders are strong. Lennar, Toll, they're just trending up here. Toll looks like the strongest one out there. Nice power trend here. Take a look at the 60-minute chart. Nice little power trend. And these ones should continue to go higher. It's kind of tough to buy them up here, but again, like I said, if you could buy that dip and the market holds up, try to get involved in them. KBH looks a little bit interesting because it's consolidating off this nice big expansion bar. This thing's probably going to take a minute to flag up here, but keep KBH on your radar as it's going to be flagging off of this nice expansion move that it had right there. What else? Agriculture stocks are looking good. Keep an eye on AGU. I was trying to trade AGU on Thursday and Friday. I traded it. Didn't really lost some money on Thursday. Made a little bit of money on Friday. But this one's warming up here. You can see how it's coming back into this key prior upward channel that it had right here. And if this thing gets above this upward channel, because it's going to be acting as resistance, it has a lot of room to run, guys. You take a look at the 60-minute chart. You can see how the 60-minute chart, nice expansion bar, broke out, held this 113. And once it starts holding above 114, a little bit more of a conviction and breaks those 115s, this thing can go nice little kind of momentum pattern setting up here if it breaks above 115, and especially if it breaks above this key trend line that we're watching for the daily chart. So that's about it, guys. We got a lot of more stuff going into for tonight's session. Don't want to make this video too long. It's already 30 minutes long. Make sure you share the video. Come check out our website. If you're looking to trade with our firm, we are proprietary trading firm. If you're looking to trade with the firm, contact me at ccooper@wallstreettrading.com. I can definitely give you more details on that. We have a good group of guys that we're building with, that we're working with right now, that we're building our group up with, and everything's going pretty good, guys. Want to get on board? Contact me at ccooper@wallstreettrading.com. Have a great day. Check out the Facebook page, Wall Street Trading. We'll put a lot of news and a lot of levels there to watch and a lot of trades intraday and on Stock, Twitch, Twitter, all the good stuff. Have a great weekend, and don't forget the Pro Bowl comes on tonight at 7 o'clock. Later.